Good day, everyone, and welcome to today's Kortana trading rules breakdown. My name is Anthony Njoku, and I'm the founder of Senex Digital Lane, where everyone who has a knowledge gap in digital trading can learn the right process, the right system, get the right guides and softwares to enable them to become profitable. So this is one of the prop firms I use, Kortana, and I recommend them highly because I've made uncountable withdrawals from them. But all of a sudden they came up with a lot of rules, and in our community we have some challenges that we have been passing through. And the main rules we focused on mainly, first of all, we focused on the consistency rule, and then secondly we focus on the profit share and payout rule. Those are the two rules we'll be focusing on today: the consistency rule and the profit sharing rule. So watch out, and I hope you smash the like button, you comment, and you try as much as possible to share this with anyone that it's going to really help out. So this is where we'll be focusing on consistency rule and profit share and payout rule. Okay. So with that said, please avoid every form of distraction and get your notebook and notepad. So let's open the consistency rule. Okay, so for the consistency rule, it's updated over a week ago. And why it was updated was because they moved their broker. They had a broker they were using before, and they moved it to a new broker. So after this movement, it happened that for a limited time, the consistency rule I'm reading now, for a limited time, only we are enforcing a consistency rule. Since we are allowing traders to pass with HFT bots, once we no longer allow HFT, we will also remove the consistency rule. Please see below for details. Traders must participate in 5 minimum trading days for each withdrawal. At the time of requesting a withdrawal, we will review your account history and adjust your balance for any trades that fall outside of your trading range. To determine your trading range, you must first calculate your average trade size. Divide the total lot volume you have traded by the number of executed trades to find your average lot size. To determine your trading range, you must first calculate your average trade size. Divide the total lot volume you have traded by the number of executed trades to find your average lot size. Example: 100 total lots traded, 50 total trades executed. 100 lots divided by 50 equals to average lot size of 2. Now, to determine your average lot size range, check below. Average lot size is times 0.25 equals to bottom of the range. Average lot size is times 2.0 equals to top of the range. This means that if you start placing trades on Kortana, for those who trade and risk 1%, 1% of a $10,000 account is $100. And if you risk based on 20 pips per trade, that is 0.5 lot size. So the minimum trading range you can use when you start using 0.5 in your trading is when you reduce your risk to 0.25% per trade. So what I mean is 0.25%, which is the average lot size, bottom of the range. 0.25% of $10,000 is $25. 25 divided by 20, which is the stop loss you're using, is 1.25. 1.25 divided by 1.25 lot size is going to be 0.12. So the minimum lot size you can use is 0.125. 0.125, which is 0.25% of $10,000 account. That is what this bottom of the range means. Then top of the range, the maximum lot size you can use is 2% of $10,000. So if you do 2% times $10,000 is $200 divided by 20 pips to lot size. The highest lot size you can use is 1 standard lot size, which is top of the range. But you need to start with risking 1% of your account, which is 0.5%, 0.5 lot size. That's what this first line explains. So your trades must be between 0.5 and 4 lots. Any trades that fall out of this range will be removed at time of withdrawal. Plus, you cannot have one trade make up more than 33% or more of your profits. This is where we're having a lot of problem. Plus, you cannot have one trade make up more than 33% of your profits. So 3 things you need to take home today. 3 things. First of all, 5 minimum trading days. Minimum trading days. And when you're trading on these days, the lot size you're meant to use on a $10,000 account is between 0.12 and 1 standard lot. And when you're trading between 0.12 and 1 standard lot, if you want to divide the 1 standard lot into 2 positions, if you want to divide it into 4 positions, if you want to divide it into 3 positions, but what we know is that it is meant to fall within 0.12, which is 0.25% of $10,000, and 1 standard lot, which is 2% of $10,000. Then, when you make profit on a trade, one single trade means you buy Euro USD, buy. You buy USD JPY, sell. You sell USD JPY. You buy gold. One single trade must not make 33% of the profit. So let's say you make, out of 5 minimum trading days, on day 1, you made $200. On day 2, you made $150. On day 3, you made $100. On day 4, you made $250. On day 5, you lost $300. Okay. So let's total up the profit minus the loss. 200 plus 150 plus 100 plus 250 equals to $700 minus $300 loss, which is total of 400. So if we check total of $400 profit, ask yourself, is $200, what is the percentage of $200 compared to 400? It is 50%. 50. What's the percentage of 150 from 400? Is around 30%. 30 to 35% is 35%, which is too high. Man, these guys, this that 33% is just so freaking crazy. So freaking crazy. Then this on their the third day made $100, which is 25% of $400. This is about 55%. And the last one is a loss. Nothing there. So mainly, this is the issue traders are having to understand. one trade make up more than 33% or more of your profits. So you need to be conscious of the trades you make in a day. So it won't be way more than the profits you have made at the end of the whole trend. But what I've seen here, the $200 we made is 50% of 400. The $100 we made is 25%, which is within the range. $150 is within the range of $35. $250 is within the range of $55. You understand? So one thing I want to advise you is, I did my studies yesterday. Once you make a very big win, you risk 1% of your account and make 3%. And you have completed your five trading days. Yes, you have completed it. But this 1 to 3% can be about 60% of the total profit on that account. Cut your loss size. Trade more days, 6 to 8 days, using 0.25%. Reduce your loss size 0.25% to grab some wins. Okay? Penny wins or penny losses, penny leads, but try and make it to 6 to 8 days. You get why? It's an algorithm. Try and make it 6 to 8 days. These little trades you have made here will still make profit for that account, which means that this profit you made cannot be the total profit on the account anymore, because the profit made on 0.25% would add up to this profit you have made, and you're going to beat this. Do you understand? So that is it about this particular consistency rule. I think that's the most difficult one we have seen so far, consistency rule. So the next one we need to attend to is the profit share ratio. That one is quite understandable though, but it's profit share ratio. It's just this consistency rule that is the issue. If they have to remove HFT, let them remove HFT. So we focus that yes, we have an account and there's no consistency rule. Then the next is the profit share and payouts. So once you receive a funded account, the following payouts scheme applies. First, payout is eligible within 21 days of your first trade. Second payout is within 21 days of your first trade for new trading period. After second payout, all withdrawal is eligible within 14 days of first trade for each new trading period. Profit share scale as followed. On your first withdrawal, you're going to withdraw 50% of the profit. On your second withdrawal, you're going to withdraw 70%. That is plus 20% of the 50% you received the last time. Then upwards by 10%. On your third withdrawal is 80%. On your fourth withdrawal is 90%. And on your fifth withdrawal is 100%. After you have made your fourth withdrawal, you graduate to our Kortana Prime program and can now request withdrawal after 7 days from your first trade plus a 100% profit split. Please note you must withdraw 100% of your profits each time you withdraw. 100% of your profit each time you withdraw. So it means that after the first 2 trades, you're now eligible to withdraw after 14 days. Okay. And then after this is 21 days minimum. Then after the second 2 trades, this is 14 days. And then when you enter and graduate to this Kortana Prime program, you are now entitled to become an elite and now start withdrawing every 7 days, 100% of the money you made. So it is self-explanatory. Thank you so much for watching to this point. Please smash the like button, share this content to your friends and family. I'll be dropping the link to register on Kortana, my referral link on the comment section below or the description section. As soon as you use this link, you'll be entitled to a 20 to 30% discount. Okay, but if you don't use my link, you might not be entitled to this discount. So what's it? It's a win-win situation. You use the link, you get a discount, and I get paid for referring you to a wonderful prop firm, which as well I can help you to pass this prop firm the first stage or the challenge stage with a HFT. We just connect the HFT to the challenge account, and you'll be able to pass this prop firm within a short period of time, max a day. Okay, so I want you to be able to what, get this opportunity, get funded, and make real profits in the market. This is your boy Anthony Phillips Njoku signing out.